So in this lesson, we're going to be going over legs. Now, what exactly are legs? Now, legs are typically formed when price would go from, like for this example, price would come up from the lowest point and then reach all the way up to this highest point, being labeled now as the highest high. The entire move is one leg. And to be a little more in depth with it, the entire circled area, this was all the volume that entered the market. And in between the lowest low and the highest high, there were a bunch of other opportunities that you could have made money. There are green candles, there are red candles. So, people bought, people sold. In the circled area, this is a bullish leg. All the buys and sells was one move, and it was bullish. Now, legs are going to be a core component to harmonic patterns in the future. And these highs and these lows are actually previous key price zones. Often, these impulses are usually caused by major news, economic events, even central bank announcements, you name it. They often push price to create other higher highs, higher lows, and vice versa. From the highest high to the lowest low, this would be actually leg number two. As we look further, this would be another high, and this would be the third leg. You can see that they're actually all over the place. They're big, they're small. You can count this as a low, and this is actually a higher low. So here is another leg. That's going to be our fourth one. Moving forward, looking at this long wick of this candle, yes, that's a high. And if we're moving from left to right, we will identify the next lowest low. And this entire move, all the selling pressure is actually one leg. Now it has retraced, moving from left to right, and this was the highest that price reached. And then it came back down to the low, the same support zone as before, making this another leg. I'm going to change the verbiage to make it better so that this is just a lower high. Now this is a higher high compared to the last one. And yup, that's another leg. And as we continue identifying them as we move from left to right, there's the lowest low once again, but this leg had a long consolidation zone. But all the buys and sells is just one leg. So the market is pretty much just walking up, down with these large scaled movements. They start from significant support and resistance key price zones. I'm going to continue marking up some legs just to the end of the chart. Now that we can identify how to see the market walking, now we could touch more on the topic of trend lines. I'm placing an arrow, as you see, from the end of all the lows, and if you were to pretend that there were these blocks for imaginary stairs, this would be the support for all the stairs that you're building. This is how you identify trend lines. See how the top one's trajectory goes outwards a little? Hopefully, in the future, there will be some bullish momentum to catch it. Trend lines can be strong, but it's not enough to bet it all on. Price is not guaranteed if you use it. We're going to clear everything and we're just going to mark out this trend line. You can also do it from the tops. And in this example that we have here, this is where you can get a better visual of a trend line break and retest. To recap this moment, price reached this low before it broke the trend line by ascending. The retest comes in when price descended in the same trajectory coming back to the trend line, and as it touched it again, it was retested, and the results show that this is going to be used as a support zone, which bullish volume entered right on cue. If we start connecting and circling all the lows on this trend line, all three of these, knowing that this trend line has been used several times already, a mental note to share is that the more times that a trend line has been used, either as a support or a resistance, the greater chance that you're going to come across a trend line break. And this happens in many ways. This trend line was broken by one candle. So I'm going to say that if a trend line has more than two touches, to be mindful that after the third or the fourth, the trend line, a break is most likely going to occur. Here we have two moves, aka two legs. The more you start to practice to identify legs, the more easier it is going to be to see the highest point of price and the lowest. The purpose is by the end of this video, you should start to train your eyes to see these better. Seeing large price movements as one is going to help you a lot. The awesome part is that we would start using our Fibonacci tool from the wicks of the candles. Now we can get into a little bit of harmonic patterns now. The highs and your lows that you identify are going to be your starting and ending point with your tool. So as we remember, with the Fibonacci tool, you can measure retracements. If we start from the high and bring it to the low, we can measure. And this retracement, because it didn't reach the same level as the previous high, because it didn't go all the way up, now when we measure it, it shows that this retracement went as deep as the 0.618 percentage level. This entire retracement is also one leg. So that's one, two. The third one was created after it reversed from the 0.618 level. Coming back to the floor, with our Fibonacci levels still on the chart, we can identify other levels that leave opportunities for price reversals. And in this example, the 0.886 Fibonacci level and the candles that show rejection, this entire bullish volume created a high. And yes, this is another leg. You want to train your eyes to be able to see these large movements as one. Instead of seeing all the little in-betweens, up and down, green and red, sometimes you have to zoom out to a larger time frame to see a much more clear picture to help you decide on your next trading setup.